a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about travel ETFs. And we know that travel stocks, shares of airlines, cruises, hotels, booking websites, they have been flying high lately, and that's thanks mainly to vaccine optimism. So there were two very effective coronavirus vaccines already being distributed. Those were by Moderna and Pfizer. And this past weekend, J&J, Johnson and Johnson's single shot vaccine was also approved for use in the US. And this vaccine is a single shot, as I mentioned, and it also does not require ultra cold freezers for storing, so the distribution would be much easier. And also this morning, Merck announced that they will help Johnson and Johnson in manufacturing this vaccine. So that will significantly boost this mass vaccination campaign and hopefully bring an end to this deadly pandemic and a return to normalcy. So there is a lot of pent-up demand for travel. So that is why these shares have already started rebounding, though I should add that they had rebounded in June last year too, but then because of because the coronavirus situation became very bad later, so the shares plunged again. So it remains to be seen how the vaccine distribution would go and whether the new variants would cause any problem. And also, one more thing investors should remember that airline travel would not return to pre-pandemic levels because business travel is likely to remain muted. Many companies, many employees, they now prefer to attend meetings via Zoom. So that is why, companies may like to save money and avoid a lot of business travel. Another point I wanted to add that airlines are likely to get another round of fiscal aid. In fact, $14 billion of aid is included in the $1.9 trillion stimulus bill, which was passed by the House of Representatives recently. So that may also help airlines and their employees. So let's take a look at the two ETFs, which are doing pretty well this year. That is because of their exposure to travel-related stocks. So the first one is the only airline ETF in the US. It is called the US Global Jets ETF, ticker symbol JETS, easy to remember. It holds US and international airlines. This was very popular with investors last year, even though, as I mentioned, the performance was volatile. It now has 3.8 billion in assets, most of which came last year. It follows a tiered weighting methodology, which we will take a look just in a bit, and has an expense ratio of 60 basis points. Now, to learn more about this ETF, we can go to the quote page on Zacks.com, and I had done a podcast with the provider for JETS. You can listen to that podcast, read our articles, reports, etc., and also go to the external homepage to look at the details and weightings, holdings of this ETF. You will see that US airlines, domestic airlines, Southwest, American, Delta, and United, these four big airlines, they get a weight of about 10% each in the portfolio. And then some US and Canadian airlines, they get about 4 to 5% weight. So Spirit, Alaska, JetBlue, Air Canada, etc. And then you will see some international airlines in the portfolio which get lower weighting. So most of the portfolio is in US airlines and rest is international. Now, the second travel ETF I wanted to talk about is by ETFMG. It is the first ETF to focus on technology focused global travel companies. So now we all book our travel on, online, on websites. We compare prices or make our bookings. So that is why this is an interesting ETF. The ticker symbol is AWAY, easy to remember. This launched in March of last year and has 259 million in assets now. It has an expense ratio of 75 basis points. Again, to learn more about this ETF, you can go to the quote page and you can go to the external homepage, ETFMG's webpage for this ETF, and look at the details. You will see that travel booking and reservations get almost 50% weight in the portfolio. Then travel price comparisons, ride sharing, travel advice, those companies. And looking at the individual holdings, Face Drive, which is a Canadian company, which it has ride sharing, food delivery, payment processing, a lot of stuff. That is a top holding in the ETF. Then Trivago, which we all know, TripAdvisor too, Airbnb, Make My Trip as an Indian online travel booking website. And then you also see companies like Expedia and Booking Holdings in the portfolio. On the next slide, I have the performance over the past year of these two ETFs, which I have compared with the S&P 500 index. And you will see that AWAY is up almost 60% over the past year. S&P 500 gain about 30%, and Jets is up just about 10%. That is because I mentioned that it had surged earlier in June, and then as the virus situation worsens, the airline stocks plunged again. Now on this slide, I have the year-to-date performance of these two and the S&P 500, and you will see that AWAY is up about 30%, more than 30%. Jets is up about 22%, whereas the S&P 500 is up about 6% year to date. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos so that you do not miss anything, and I'll see you next week.